So, let's talk about a company you've probably never heard of, Tega Industries. But here's why you should care. They are making a massive billion-dollar bet that could totally change the game in global mining. It's a classic story, really. Short-term pain for what they hope is a huge long-term gain.
All right, before we get into the nitty-gritty, let me ask you something. When you picture a huge mining operation, what comes to mind? Probably those giant monster trucks, right? Or massive excavators? But what's the one thing that really keeps those billion-dollar sites running 24/7 without just grinding to a complete stop?
Well, the answer is something called consumables. And it's a great name for them because they literally get consumed. The best way to think about it is like the tires and brake pads on your car. You know they're going to wear out and you'll have to replace them. Now just imagine that on the scale of a giant mining operation. We're talking about these critical, high-wear parts that are just constantly getting battered and need to be swapped out. And that, right there, is where our story really kicks off.
All right, so let's properly introduce Tega Industries. These guys are a huge deal in their niche. In fact, they're the second largest company in the world when it comes to something called polymer-based mill liners. Basically, they design and build these super important consumable parts. You could call them the unsung heroes of the mining world because they're essential for crushing up all that rock to get the good stuff out.
Okay, so to really get why Tega is making such a massive move, we've got to zoom in a bit. Let's look at their latest earnings report because it tells a pretty contradictory story. So here's the deal. On one hand, their revenues are up. Awesome, right? But on the other hand, their profitability, their margins actually went down. So they're making more sales, but less of that cash is sticking around as actual profit. Kind of weird. So what gives? So let's start with the good news. The company brought in a solid 718 crores in revenue for the first half of the year. That's a pretty healthy jump from last year, and it shows that, business is still rolling in. People are buying their stuff.
But, and it's a big but, a whole bunch of things went wrong at the same time and just hammered their profit margins. Management pointed to, geopolitical headaches, clients delaying their orders, and just plain frustrating shipping delays. And then, to top it all off, there was this one big, unexpected expense that really took a chunk out of their profits.
And we actually have a number for that one-time hit. The CFO, Shard Kumar Kedan, was pretty upfront about it on their earnings call. He basically said, yeah, this thing cost us somewhere between 17 and 20 crores. Now, they're framing it as a one-off, a temporary blip, but it's for sure a big reason why their profits looked squeezed in this report.
But here's where the story gets really interesting. While all this short-term drama was happening, Tega was quietly working on something huge, something that can only be called a game changer, a massive, massive bet on their future. They announced they're leading a charge to acquire a global giant called Molycop. And get this, the price tag is $1.5 billion. I mean, this isn't just buying a competitor. This is a move that completely transforms who they are as a company.
And the strategy here is actually brilliant. Think about it like this. Tega makes the bowl, the protective liners inside the giant grinding machines. Molycop makes the marbles, the super tough steel balls that go inside the bowl to do all the crushing. By putting them together, they become a total one-stop shop for the whole grinding process. It's a perfect fit. And just look at the scale of what they're creating here. Together, we're talking about a company that could bring in around $1.7 billion a year. Their global footprint, over 40 countries, 26 different factories. I mean, with one move, Tega is jumping into the big leagues, a completely different stratosphere.
So, okay, a massive deal is on the table. What does the future look like? Well, it's that classic tug of war, isn't it? Huge growth potential versus huge risk. Let's break down the opportunity side of the equation first. This right here, this is the secret sauce to Tega's business. See, their success isn't really tied to whether mining companies are building massive new mines. That's a boom and bust cycle. Instead, Tega services the mines that are already running. It's all about that aftermarket. And get this, over the entire life of a piece of equipment, the amount a company spends on these replacement consumable parts is about 3 times what they paid for the machine in the first place. That's what you call a reliable, recurring revenue stream. It's beautiful. And Tega isn't just playing defense with this reliable model. They're on the offense too. They've developed this really innovative product called Dynaprime. And its whole purpose is to go after and replace the old school metal liners that a lot of mines still use. That market, it's worth almost $1 billion.
That's the prize they're gunning for. And this chart really lays it out for you. Look at that big blue slice. Over half the market is still using those traditional metallic liners. That 56%, that's exactly what Tega is targeting with Dynaprime. They want to convince those customers to switch to their newer, better technology. That's a massive, massive slice of the pie just waiting to be captured. So we've seen the short-term hiccups and the gigantic long-term bet. But what do the pros think? The financial analysts who spend their days crunching these numbers, what's their take on where this is all headed? Well, to put it simply, they're bullish, really bullish. The forecasts show revenue just climbing and climbing. They're expected to hit over 26 billion rupees by 2028. I mean, that's a huge jump in just a couple of years. That is a seriously powerful growth curve. So what's behind all this optimism? It's not just one thing. We're talking about projected earnings growth of over 22% a year and revenue growth of 17%. A lot of that is being driven by huge demand from gold and copper mines. Plus, they're making smart moves like opening a new plant in Chile, which puts them right in the middle of a massive mining market. And all of this brings us back to the big billion-dollar question, doesn't it? On one hand, Tega is dealing with all these little operational headaches. On the other, they're making this colossal bet to acquire Molycop. So is this a brilliant masterstroke that's going to make them a global titan for years and years? Or is it just too much too fast? A huge risk for a company that's already growing like crazy? I guess we'll just have to wait and see.